Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 6th of July, 2023. This is episode number 2496. Please remember that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you this morning? How are you doing? How's your summer so far? Are you remembering that it is summer here in the Northern Hemisphere? And things have slowed down. Just take it easy. Although today looks like a pretty decent selling day here. Let's take a look at the Convergence Trading pre-market summary sheet here. This morning, strong risk off is the risk posture of the market. We have Europe just getting pounded here, the Euro Stoxx 50, which is about the equivalent of the S&P 500, but for Europe, it only has 50 stocks, but they're really big stocks across multiple countries. It's down 2%, which is quite significant. There's nothing that I'm seeing. There's nothing. I've kind of scoured the news this morning just to see what the deal is, but really, this looks self-driven, more technical, more auction-based than it is some big news event. And so, to me, this is kind of makes sense, especially for U.S. equities. There's been quite a run-up over the last few months. We went to 4,500 in the S&Ps. We've really pushed in the NASDAQ, and now it looks like buyer exhaustion, really. So we're seeing some of the things that we talked about yesterday play out today. Yesterday we opened an internal gap down and ended up not accomplishing what was expected, and we're accomplishing it this morning in spades. So that's what we've got in terms of earnings. There's not much. Remember, the earnings season starts here next week. The market's anticipating some off earnings. That's quite a bit of pressure. The FOMC minutes yesterday were hawkish. However, there's no surprise. The Fed has been speaking about the same thing. These guys have been saying the same thing out in the open. The Senate hearings, the House hearings from Jay Powell have said the same things. The FOMC minutes reflect the same things, although the FOMC minutes revealed that more governors were looking for a hike rather than a stay in interest rates, which was interesting. So there's nothing really there that's surprising that you might think is driving this. We don't want to read too much into this and try to figure out why this is happening. The fact is, price action shows that we are auctioning lower. We did a pretty good job yesterday bringing the auction back up to where it was on Friday in the S&P. The NASDAQ actually pushed higher, and now we're lower, and that's all you need to know, really. But understanding what's behind this lets us know how to treat if there's an SOC, a scene of the crime, or an interruption or disruption to the auction, and that's the important part. That's what I'm scouring the news for. A news-based move is different than an auction-based move. News-based moves very often get discounted and get a response back to where they came from. An auction-based move does not. It generally moves value, and it's pretty meaningful. So that's where we are. U.S. ADP employment change higher than expected. Initial claims slightly higher than expected. Feds Williams not content with where inflation is right now, and that fighting inflation remains the Fed's main job. And then, of course, Saudi Arabia's energy minister said OPEC and its allies would do whatever's necessary to support the oil market. Good luck with that. And that's where we stand. So news-wise, not very much going on here this morning. We do have some pretty big numbers ahead of us here. In the ISM services, that's important, and the JOLTS job openings The Joel's job openings was very important when it was pushing, close to 12 million open jobs. It is now expected at 9.935 million. The prior is 10.103 million. So we're expecting that to keep going down. In other words, job openings are either being filled or they're being pulled by employers, which has a pressure relief effect on interest rates. And then today, because of the holiday on Tuesday, we get the EI crude oil stock change at 11 o'clock. Gasoline inventories also at 11 o'clock. Crude oil stock is expected. Crude oil stocks are expected to show a draw of 983,000 barrels. Gasoline stocks are supposed to show a draw of 1.417 million barrels. So this is where we stand. Looking at the S&P, the S&P is definitely in a trend down. The S&P was in a trend down yesterday, and it reversed it on the open immediately. By the way, the open yesterday in the S&P really immediately spoke out. It was an open drive, not a super strong open drive, but it was an open drive nonetheless. And as you can see on the sheet in front of you here live, the volume just turned blue. We just crossed above the one standard deviation limit of volume for the overnight session, which means that we have very unusual volume when compared to the last 252 overnight sessions. So pretty heavy action here. We're opening in a gap, and I expect the open to be quite busy. This is the type of open where you want to shut off CNBC or whatever and purely focus on your process. This is an open that's very, very likely to speak very early with some potential early opportunities. I generally don't like to execute before the first 15 minutes are up, but these kinds of days make it so that the opportunity shows up early, oftentimes. So the S&P is in a trend down. It has an impulse lower, an impulse to 44.42. If you recall, there's a gap down into 44.38. We expected it into 44.51, 44.40 yesterday, and we'll look at those details in a minute. The volume's 303,000. The expected volume is around 260,000. It's been around 160,000, so it's pretty high. Like I said, it's blue, and the inventory is 100% short. All of the volume is on the short side, meaning it has traded below yesterday's close. So the inventory is very heavy short on a lot of volume. So look for some responsive buying on the open to rebalance some of that. The range is also pretty good. The range, one standard deviation of the range from the mode is 44 points. We're at 41.5, so we're approaching the edge of what we would consider normal. So that's quite high as well. And so the expectation, and generally the rule of thumb, is what you get in the overnight. It kind of speaks to how much activity we would get during the day. And this is forecasting a strong potential for pretty good range, pretty good volatility today. So watch those stops. So that's that. The point of control has shifted to the same place it was yesterday. It's around 44.65 or so. Hasn't really moved that much between yesterday's overnight session and today. And so we could see that value has kind of topped out and is rolling over. Let's look at the charts. I'm going to start this out with a composite just to give you a big picture overview of what's going on. By the way, here's what I showed yesterday. Again, this is yesterday's recording, but what we showed yesterday is we want to see how it treats 75, 80, that kind of zone there. The LIS was around 75, and what it did is it opened strong yesterday at 71, and it immediately pushed up. The low of day yesterday was just one tick below the open, so it was a bit of an open drive, and it pushed right up and came right into Friday's value and tested Friday's settlement and close. The expectation was it would go into 80, rollover, pull down, and then I drew this line right here, right at 44.50, 51. This was the expected target for yesterday. Coincides with the low from the last high of the year, and it did not accomplish this yesterday. So we talked about this. Beyond here, we're looking for 44.38, and then if it gets below 44.38 and stays offered, meaning it just finishes somewhere in this balance days range, then 44.16 becomes the next key test area, and we need to keep that in mind now that we're down here. So here's the composite chart. This has daily bars on it. It has daily bars on it. You can see that show extended is removed, so these are just RTH session daily bars. We are down here, we're trading down here right against the support area that's highlighted here in green. It puts 43.68. If we push through the 44.16, 43.68 becomes a really big and important area where stops are very likely to be bunched up under there, because what we have is a big kind of cup and handle formation, and we kind of broke the pivot at 44.93.75, but we only went to 44.98. That was a very weak break. So the question becomes, do we start to get weak sellers, weak buyers kind of selling into these support areas? Do we get support or not? But the fact is, we pushed to 4,500. We couldn't take that out, and we're pulling back here, and we're right at support. Again, we're trading at 44.44. Support is in this area of 38 to about 41 is where I'm expecting support to be, and that's where we are this morning. So this is the big picture. We're below the monthly VWAP, but the monthly VWAP has just begun anyway. Here's what happened yesterday. Yesterday, nice open drive. You can see there's no tail, really not much of a tail on that first bar. It pushed up and it held sideways for most of the session. We ended up with a profile that looks something like this. And what it did is it tried to come in line with the profile from Friday. It formed this nice little balance area up here, and now we're well below that balance area, trading way down here. And so to me, this has a fair amount of resistance above it, but don't be shocked if this morning we get a push higher because of the way the volume and the inventory is positioned. It's very, very likely to kind of to try to push back up our magnets around 44.65 in this zone right here, 44.65. So the expectation is it's likely to retest that magnet, rebalance the inventory before we kind of chop around and then potentially give it up into the 44.38 and back into the naked point of control down here from last Thursday at 44.30. Okay, if we finish inside of this profile, then 44.16 gets into play. So if you are short into that, it's very likely to pay out. If we don't hold the 65 on the way up, if we push up, kind of balance, then squeeze through the 65 and then use that as a base, then you're looking at a gap close trade and then gap to settle trade into yesterday. I don't see that being a high probability, but we have pretty good range today, so anything is possible. So it's very, very important this morning to see the quality, and it would be great if I can replay in high speed what that looks like. You got to see what the quality of that movement is. How is it rotating up versus down? These are going to be very important pieces towards setting up our bias, setting up trades. Let's look at the short term. Here's the short term chart. This is my active chart. And so we immediately open and it's just an impulse down on the Asian Open. Europe opened right here. Nice little zipper. This is where our point of control is in the overnight session, which is right on top of our magnet, right on top of our magnet. And then now we've pushed into the 50, which is the mid-century. So the target for today, for yesterday, was 44, 51, 50. We pushed into the 50 and we squeezed through, and you could see buyers stepping in right in here. So as they hammered on the bid, it was getting absorbed, and then as soon as the bid started getting stopped getting hammered on, even though we haven't given up the low here, as soon as that slowed down, you had buyers kind of stepping up and covering real quick. However, it was expected to bounce up into this zipper here in the 44.55 range. If I was short, this would be my control. I would use that as my risk control. This is my control for trend, would be this very, very clean, clear zipper. And as long as it does not get breached, I would remain short. If you're short from up here, that's what I would do in anticipation of a few more points down into 38 to close the gap this morning. So when we open up, let's shift this over. When we open up today, it's very important to see what is the quality of the rotation higher, and does it stall out at the magnet or ahead of it? Does it come all the way back here? Does it stall down here and start turning over? And then on the repeat, on the return, is it a weaker? So you get this big push, then you get this squeeze down, and then you have a weak push higher. This sets up a short for continuation down into 38. If we have a big push, a weak pullback, and a stronger push higher, then you're looking at it pushing into the magnet at 65, and then you're looking at it to close the gap from yesterday at 71 or so. Those are the two key plays. The NASDAQ looks pretty much the same. Here's the NQ. NQ, relatively stronger, right? It pulls all the way back, has a pretty good push back, and then it's holding a little bit higher. The NQ is expected to turn around and go right back into this 30, 40, 15,230, 15,240 area before we start to really see if the buyers are motivated for these lower prices, or if the sellers are stepping in and looking for a push lower. You'll see the small lots in the NASDAQ are actually long. So the small lots on the way down have been buying. This line has been kind of progressively moving up with large and very large lots. This is MBO data. I didn't restart my platform last night. They're pretty solidly, the bigger player, pretty solidly selling into these lower lows. So who wins this fight? Just relax on the open, step back, and let it show you what kind of rotations you're looking for. I'm going to watch my zigzag indicator here for rotations to start to see, okay, what rotations are more meaningful, more scalpish at the open, and then I'm looking for a structured position as we push into a magnet, the VWAP mid, and so forth, until it establishes a true direction. The trade is going to be more scalpish this morning. There's likely to be pretty good volatility and pretty good rotations. This is a good day to be aware of your emotions and to kind of stay in control of how you feel, so that you're not responding to your emotional triggers, but you're more responding to what the market's doing. Here's the S&P's order flow or relative delta. You can see the large lots are already covering a little bit. We saw that from the low. We saw these guys start to come in and lift. The very large lots are not participating in any buying. The small lots are not participating in any buying. So to me, the ES from an order flow perspective looks to most likely rebalance to the upside and then consolidate in this range at the low end, on top of the mid-century at 44.50, and then finally release. We still don't have a continuation move on this impulse down. Okay, so my primary scenario on the S&P as well as the Nasdaq is small pullback to rebalance overnight inventory, most likely, and then looking for an opportunity for it to start turning down. A weak pullback triggers the setup, and then look for the overnight low to be taken out before it continues to 38 and before the Nasdaq continues down into 15,100 or so, at least to test that out, if not to get into the 15,000 type of thing. So we'll see. We'll see how that goes. That's all I have for you. The TPO charts are pretty clear. I mean, here's the S&P, here's Friday's value, here's yesterday's value. Everything was, yesterday they were very motivated to come back into value, and just the machines just shut off for the rest of the session and just sat sideways. Today, a whole different story. We're opening in a gap, and it's out of balance, and that creates opportunities for us. The Nasdaq looks a little bit different. The Nasdaq opened in Friday's range, but it pushed a higher high to Friday. It still ended up being imbalanced, and then today it's lower. So the Nasdaq's very likely to try to squeeze higher before pushing lower. The Nasdaq has a pretty decent balance zone here at the 15,100, which is what I talked about a minute ago. Let me know if this is confusing. Don't forget that CT is having this summer sale on membership. We'll be talking live throughout the day about the action here. You can participate in this sale by pointing your browser to go2ct.pro/summer20, all lowercase. Pretty decent time to join. Make sure when you join that you do the Trade Right program. Make sure you print out the market stats reports so you can get the intraday statistics and attend today's AMA. We have an hour AMA at 1 o'clock Eastern, and then we resume our trade talks next Tuesday, and so on and so forth. I'll catch you in there. Good luck.
And a bit more commentary on this from the UAE.